Good morning, traders. It's 8:02 a.m. Chicago time on Monday, the 15th of August, 2016. Hopefully, you have a very productive week this week, although it's shaping up to be a quiet one. This is another Trader Bite early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. When we look at the overnight news, there isn't too much driving us around except that Russia and Saudi Arabia are said to be in talks about oil. The both countries are working towards creating market stability in oil, which basically to you and I means lower production probably. Currently, oil is up about 0.93%. Oil has gotten as high as 45.15 in the overnight session. Currently trading $44.90 on the September contract. So that's one of the key news. Japan's economy went nowhere in the second quarter. The Japanese economy posted 0% growth for the second quarter. Additionally, the world's third largest economy grew at just a 0.2% annualized rate. It's a big problem for Abe and his policy. And then other than that, this morning, really not too much to talk about. We got about a half hour ago, we got the August Empire Manufacturing came in at negative 4.2 versus 2.0. Since it's Monday, I'm going to take a quick look at the weekly calendar. In addition to today, the expectation is for we have NAHB housing market index in the U.S. for August, expecting 60.0 at 9 Central, 10 Eastern. It's a half hour after the open. And then this afternoon at the close of cash at 3 Central, 4 Eastern, we get U.S. total net tick flows for June. No estimate. The prior is negative 11. And net long-term tick flows. This is a measure of money moving in and out of the U.S. Of course, we have a 3 and a 6 month bill auction today. But looking at the week as we are again on Monday, big week for the UK. Starting tomorrow with PPI, CPI, and RPI releases all at 4:30 Eastern, 3:30 a.m. Central, about an hour and a half after the cash open in Europe. And then the zoo survey in Germany, trade balance in Europe, and then we get U.S. CPI, housing starts, building permits, industrial production, manufacturing production, and capacity utilization tomorrow. So a lot on deck for tomorrow for the UK, Germany, Europe, and the US. And then we have Fed Speaker Lockhart tomorrow as well. On Wednesday, again, we have the UK ILO unemployment rate for the last 3 months. That comes out at, again, 3:30 Central, 4:30 Eastern, along with a slew of job-related numbers in the UK. Following that, we get the U.S. Energy inventories, crude oil, distillate, and gasoline inventories. We have Fed Speaker Bullard, and the Fed minutes are released on Wednesday. That's been a mover the last couple of times as folks read into that. On Thursday, we get the Euro current account, ECB current account, UK again in the economic release headlines. The UK retail sales, Euro construction output, Eurozone CPI. We also get US Philly Fed. We get the leading index, and then we get ECB Speaker Williams on that's Thursday. On Friday, very, very quiet. We do get German PPI early on, UK PSMB interventions, and then the rest of the day is completely clear. Canadian CPI comes out. Friday looks like a sleeper. So that's what sets up the week. As far as the risk and money flow this morning, looks like risk capital is market capital is moving towards risk, with oil leading the pack. Oil now trading at almost $45, up 1.1%, followed by the Russell Dow Jones, the DAX, the S&P 500, the Japanese yen, the Nasdaq, the Euro FX, the Euro stocks, gold. Those are the positives. Gold is basically unchanged to up 0.01%. And then the U.S. Treasury bond is at the bottom of the heap, followed by the British pound, the Euro bond, and the 10-year Treasury. So it looks like money flow is somewhat into risk capital this morning. That's a lot to say in one breath, right? So uh, that sets up basically the background. Let's take a look at what we had planned for on Friday. Friday coming in, we were looking for an open auction, a test up to about 83 and a quarter, the 83 and a quarter area, a test down to 76. We were looking for 76 to test this MC point of control. Let's change the color here. We're looking for this line to be tested right here. And then from there, we're looking for a base and then for it to start moving up and potentially out. That was the primary hypothesis. The secondary hypothesis on Friday, same thing, except failure to get to 83 and a quarter. Therefore, an immediate test below after an open auction, struggle at the 76 area, and then start to move out through the 83 quarter and out of range. That didn't quite happen. We had a bit of a hybrid of those hypotheses on Friday. So here, by the time the trader bite was done and the market was about to open on Friday, instead of opening here as expected, it opened a little bit lower. We had an open auction with a clear opening swing. You can see a very clear buyers came in right here at 78.75. Sellers came in at 21.80.50. We jockeyed around for a little bit, broke the opening swing high towards the gap close, and then ultimately tested the point of control. Remember, 83 and a quarter on that hypo one. 83 and a quarter, stopped at 83, missed it by one tick. We've seen that a fair amount lately. And then it rotated down to where? To 75.50. Remember, 76 is about where the MC point of control was. So it pushed through by a couple, and then it started to rotate up, and basically the market ran out of time at that point. And so we didn't get that. We didn't get the test of the MC point of control, pull back, and then push as expected. Fairly dull trade on Friday. The volume, though, was in line with the point of control of all volume since October of 2013. So if we look at the daily and we look at our daily volume, remember, and I'm talking about volume for the day session only, for RTH only. This doesn't apply for the full session. The most common volume is listed right here as the point of control, or the mode right there, 1.05 million contracts, and we've been trading approximately, if I send this to the back, we've been trading right on top of it. You can see that these days here are right on top of the point of control for volume. So volume is pretty much lingering at the most common volume since October of 2013. That's basically a statistical determination. It's not a feeling or an idea. So it's fairly valid. So you can't say that the volume is not there. The rotations aren't really there. Although Friday, provided a pretty decent rotation down, but overall, you really need to sit through for quite some time to get something going. Yes, Friday's range was 7.5 points. That's it. Am I right? Yeah, 75.50 to 83. 7.5 points. That's really anemic. So when we go back and look at our long-term chart for range, the most common range is 11 points, with 7 being the low end, 23 being the edge of what we would consider to be normal. Again, going back to October of 2013, which was the swing low, and you could see here As I pull this out, you can see here the range is very, very low. The range has just absolutely collapsed since the nice trade we had here, January, February, and part of March. The range has just completely fallen, except of course for Brexit. It's just falling as a part of what we do for the summer anyway. So that's where we are. This is why I keep warning of being patient and kind of choosing your spots. Now, Friday in our review here, in addition to uh, the fact that the volume was in line. We're also looking at what happened in the auction on Friday. What does it do? So you can see as I move this profile forward to encapsulate Friday, because Friday was also inside of balance, so we want to include it in this profile. You can see that we're building the profile upwards. We've built this area here, right? And it essentially stayed within the value area. It stayed within the upper part of this profile, and this profile is becoming filled. Remember, this profile was empty up top and seemed normal down below, and now it seems to be heavy up top and thinner down below. We still have a key area down here if you're using the flex level indicator, which is free on IRT and are pointing it to my server. You're getting these updated lines every week, every Sunday, and a new line that should have popped up on your screen is this key LVN from last Wednesday. It's an area that we have not tested. This area here is the 7374 low volume node, which shows up on Wednesday the 10th, but it's also the low of Monday and Tuesday. And if we start to move down here and test it, we might see a quick drop into the 72, 71 area if we get below 74. And then what's more important is how is it treated on the way up? I would be looking for any sign of liquidity coming in and holding prices down at 74 for a short. And then if the short comes in, I would look for a rotation down to that gap zone at 66.50 through down to 63.50. That would be the target. That is not hypo 1. I'm just saying watch for that 74. It's kind of an over-under line now. That's why it's in red right here. So that's how things have shaped up so far. Looking at the as part of creating our context picture, we'll look at the overnight. The overnight was fairly dull. The overall trade is a P shape. Very, very, very quiet overnight session. 116,000 when I came in. It was about 98,000 contracts have traded. Remember, the mode for this, or the most common volume for the overnight session, is about 220,000. So essentially, we were about half of that by the time the trader bite started, and that's not very promising. The market opened, quickly tested down, and has drifted up, and looks to be pushing new all-time high territory. The prior all-time high was 85 and a quarter or something on the day session. Yeah, 85 and a quarter, 85 and a half. Was it 85 and a quarter? And overnight it got to 85.75. The market looks to be drifting higher, wanting to drift higher, and it's probably going to continue to do so with a very clear ledge. So this morning I'm watching this 2183 area. 2183 is going to give me an indication that if we stay above 2183 and we're not able to test lower and hold lower, in other words, break below, hold 2183 area and continue down, then we're likely to just have a dull day up. Remember, Mondays and Fridays are the least active days of the week historically, statistically, with a lot of the action happening on Tuesdays, then Thursdays, then Wednesdays, in that order, with Monday and Friday being almost equally weak. Friday actually losing out on the contest. So with this being Monday, again, Just, I'm going to tell you what I tell any prop trader. Just pick your spots. Don't put your pieces out there. Think of it as a game of chess or something. Don't risk your knight or bishop or whatever. Don't risk any big piece on a board game that's very, very dull. If you're going to make a move, look for a high probability move or take very small risks in the form of scalps if that's what you do. Don't deviate from your plan though. I want to quickly review the notes because I brought it up on Friday, and the formation I was looking for did not complete. So on Friday we had this impulsive move up, which I said, if you listen to Friday's pre-market trader bite, I said that this move up is likely to help push the indices lower, and the expectation is it would likely have a pullback as far as low as the mid here, with the day before having a toothy profile, really no value at all. And then the expectation is for this to try to attempt to push to that 132.29 handle, which is likely to push us lower initially on the open. That did not happen. We had a failed high on Friday, and the market rotated back and started taking back much of what it gained overnight. It didn't get down to the open drive. This was an open drive. You could see that the opening print is the IB low and the low of the first bar. And overall, it just did not behave as expected. So this is a failed pattern here. The expectation on the notes, if it does start to rotate up, on any rotation up, I would be looking to get short. I'd be looking to get short and look for a continuation move lower now, as opposed to pushing higher. This is a clear failed auction high, not a failed auction high, but a failed high to push the on the impulsive move. You can see there's a fairly healthy taper on the notes on the high. And the expectation is it would likely see resistance all the way through here on a retest. Of course, throw all that away if the Fed or somebody from the Fed decides to go out and say something, because this is a fundamentally driven product. So with all that being said, let's look at what we're expecting for today. With the overnight profile being shaped something like this, with a box right at the overnight VPOC, trading right on top of Friday's high. The expectation is for a push of the overnight high early, potentially an attempt higher, and then I'm looking for it to start to auction down, find a base, and then start to make its push again higher on the end of the session. That would be hypo 1. We got to pay particular attention to the overnight VPOC, which is also the overnight mid, which is also the 83 high from Friday's session. But essentially what we're doing is we're trading right on the edge of the balance range, and when we've done that, we've essentially pushed the new high in the past when we've done that. So that's hypo 1. I'm running out of time here. Actually, I'm past my time. Hypo 2, if it does open in an open auction and immediately test lower, then I'll be looking for the 79 test. I'd be looking for an attempt to break higher, and I'll be looking for failure for another test of 76 on hypo 2. That's the better trade, really, because the rotations have more breadth or more width to rotate through. A push higher will give us smaller rotations, smaller opportunities to actually take advantage or make mistakes and still recover. Okay, so that's how things are shaping up. I want to ask you before you run off, take a moment to hit the like button on YouTube. If you're watching this on the Stage 5 website, just hit the YouTube button at the bottom right corner of the video to go to YouTube, to the YouTube version, and hit like. I'm studying a different spot to stream from, and it would help a lot. It would help me a lot in getting approved through these likes, and that's what I'm pushing for currently. So whenever you watch these videos, I would really appreciate you hitting the like button. Thanks for listening. Good luck today, and just keep it tight this week, okay? Take care.